1, 2, 3, 4. What's on
There you go. That's the start.
All right. So get your pins up.
Happy little trees. Happy little trees.
Oh, wait a minute, Daniel, you don't have one. You don't have one. Here you go. Here, Daniel. Grab. There you go.
Buddy.
All right. Yeah, there you go. Nice.
Hey.
Oh, it's an invisible pin. All right.
It's not invisible ink, though. It's
No.
not invisible ink.
All right. Oh, he brought back the Red Bull for this week's sponsorship. No, just kidding. Not sponsored. Hey, hold on.
By our refrigerator. Sponsored by our refrigerator.
Josh is going with somebody else now, I guess. Maybe Celsius or something. I don't know. All right.
Big Celsius guy.
I'm rocking a Diet Coke.
What about a nice white Monster? That's a good
Daniel, why's it got to be white?
Yeah, why?
All right, here we go.
Because that's the color of the can.
Oh, okay. All right, so here we go.
So that's where White Claw came from.
All right, this is After the Bell. Just in case you didn't know what the heck you just tuned into, some crazy Zoom off in somewhere. I don't know. But this is Wednesday, and we did have a red day. We'll talk about that in a second. Today, anyway, and we're kind of getting jerked around and still within a channel. So that's just kind of where we are. I am Darin Harper. I'm the resident ape. The other ape-ish person is the banker down below me, which is Josh. Yep, that guy, JP Morgan, and no relation. And then the top right is Daniel, who comes to us from it looks like almost like a closet in where are you? Japan, Thailand, Singapore? Where are you this week?
I'm still in Bali. This is the co-working space where
Bali,
the internet works.
there we go. That's the Bali
So,
one.
but I have to miss the next episode because that's my trick to winning apparently.
Oh,
yes.
Oh, strategy has become. No, you missed a lot last year, and you still only had.
We gotta back test this strategy. See if I win again if I miss it.
How convenient! And then we've got our wayward leader there, our Quanticus, who's busy. Look at him; he's making another million. Look at that. There goes another million, and there goes another million. Oh, hey, Royce.
Hey,
say hi.
Hey, I make millions sitting here.
Exactly. He sleeps and makes millions. That's because that's what our bot does. Hey, enough of the commercials about arbitrage trade. Let's go on to the beginning here, which is about the markets. We do this every week. Like I said before, it was a red day. Red rum.
It wasn't that red. It was.
Yeah, but it started off green because they did the whole narrative this morning about, hey, the tariffs. He said he's going to pull back on them. There's not going to be as many. And then midday. And in fact, I don't even know what happened right after while we're recording here. But Trump is supposed to have another conference or another thing. Maybe I'll pull it up while you guys are talking and see what happened with that. But he was talking about actual tariffs and then what he's going to do more in detail now. So I don't know. He's jerking around the stocks just like our buddy Jerome Powell does with his jawbony. So anyway, Dow Jones is down 0.31.
Go down.
Dow Jones is. I did hear somebody else today say another 13%, which would make it 23% from the high. So there's people in my camp all of a sudden.
Why 23%? That's very.
I don't know. It was weird. I don't know. Maybe he drank too much last night. I don't know. Anyway, Dow Jones was up.
It's a Fibonacci level.
It's Jordan's number.
Maybe that's what it was. I don't know.
It's Jordan's number.
Yeah.
I mean, that's about how reliable a lot of these metrics have been lately. Like, might as well pull something like that out of your ass.
It's the Jordan indicator. You still got to do the underwear indicator there, Daniel.
We'll do that next week.
It's an actual thing. I didn't say it. CNBC did. All right. So S&P was down, and it was the big guys: Tesla, Palantir. Who else was down? Nvidia. Those three were down, which kind of pulled everything down. Nasdaq was down 2%, and S&P was 1.12%.
Reddit was down 4%.
Yep. They're kind of big stocks, so they kind of influence everything. So let's go here. So Daniel, give us a recap of the markets. You drew up one. I'll just let you recap it. Talking about you're talking about moving averages and all that. Go ahead.
The Fed, when they had their meeting, appeared maybe a little bit less dovish than people had hoped. So they said that they, still plan to cut rates twice this year, which at the rate things are potentially looking, kind of disappointed the market. So things were down on that news. The S&P currently sits in between the 200 and 500 day EMAs. So it's kind of like bouncing in like a small little range. And I'll let Royce talk about how that sits in the arbitrage indicators, which can tell us a lot more. My old faithful Bitcoin, reached a nice 87K. Let's see where it is now. I think it didn't drop. So it's still sitting there. Thank God, not broke yet. But the dollar has bounced back up to the 104 level. So that's not good as far as markets are concerned.
Okay.
Darin, you want me to talk about the rest of the stuff, or?
Yeah. Well, we'll come right back to it. Let's let you, since you kind of pulled in Royce there, to talk about the moving averages and where the stocks keep moving as far as these S&P and everything else. So go for it.
Yep. So the title of Sunday seminar was "Rally or Not, Here I Come." Yes. So going into Monday, Tuesday, I fully expected the markets to rally because basically they had been beaten up so bloody over the last few weeks. So I expected a relief rally. So now the question is, will this actually be a dead cat bounce? Is it setting up to actually now go lower? Because guess what? I am seeing O's on the top of the chart saying that it was overbought from this Monday, Tuesday rally that we had. So basically it moved too far, too fast. Tesla in particularly went, I think, almost $40 up in a single day. So that was definitely too far, too fast, definitely almost 15 or so % of its value in a day. So is this a particular, or could this be an actual dead cat bounce? Hey, well, guess we'll have to just wait and see.
Okay. Well, speaking of that,
by the way, it has nothing below it and everything's above it. So that means to get back into a bull market, we have to get above our compass line, above our momentum line. And I just don't see that happen. And even the Z Pro is like, yeah, no, you're clearly in the sweet spot for more falling. So we'll see. We'll see.
As Daniel had mentioned on his notes, which I've also been hearing, because the narrative is that this is all retail pushing this up. BS. And
no, end of the quarter. It's also triple witching in March and all that good stuff.
So Daniel's numbers were that retail poured in $819 billion into equities last week, and that also we're seeing an exodus to foreign stocks or to global stocks. So I guess because the rich guys, the guys that are in the know, and the guys that do WhatsApp with everybody every week, they know to just get out of U.S. equities and go elsewhere while the retail takes the hit and the rug pull. Hey, what's going on there, Josh? What you want to add to this?
I don't know. I just thought one of the interesting, I mean, I guess, I don't know if we've gotten to it yet, but mentioned about the copper prices.
Right. Go ahead.
That one was just kind of an interesting bit to me because typically, we talk about we're in correction and, are we heading towards like recession territory, or is this just, and then Royce, to his point, was talking about, are we in a dead cat bounce and stuff like that? And typically one of the things that you can look at is the price of copper, and copper prices typically, can accurately predict a recession. But right now we're in kind of a unique spot because you've got to factor in all of the like geopolitical and like macroeconomic things that are going on. And then the glaring issues are like tariffs. Well, tariffs had, he's already threatened more tariffs on copper and import on materials and goods. And so it's artificially inflated the price of copper. So everybody is kind of, you'd think that because copper is going shot up to all-time highs, that's a strong indicator of the, we're heading towards a recession, and it very may well be. But when you factor in the tariffs, we kind of, it makes that a little bit murky. And it just makes it adds to the uncertainty that we've been dealing with, and all of the frustrations that we're experiencing with the market as a whole.
Yep. Why copper? Why is copper such an indicator there, Josh?
Well, I mean, you got to think about like copper, what it's used in, like it's tied to industrial demand. So you've got copper like building cars, power grids, electronics, orders for raw materials. You've got, China uses it. They import a half of our copper. So if you get more of like an economic slowdown or something like that, copper is a commodity that investors use during growth periods. And so you typically see a sell-off when a slowdown is expected. But right now we're not seeing that. We're actually seeing an increase in those prices. And then falling copper prices are typically, an indicator of weakened economic confidence, but that's also anti what we're seeing as far as the copper price is concerned.
Wait, upside down world?
Yeah. I mean, and it's just making, it's screwing with consumer confidence, because all of these economic indicators that we've had that have been rock solid for so long are now thrown out the window. And I keep saying, we're in a crazy market right now, and this is just another example of it.
Yeah. Daniel and I are talking about stagflation, and that word keeps coming up because everything seems so upside down, and that can be a sign of the S word, and hopefully not the D word. But anyway, we'll start with the S. And then move our way.
Don't worry. Powell clarified it. It's just transitory. It's no big deal.
It's exactly.
Oh yeah, right. That went over real well last time, huh?
That's what I'm saying. It's not like that's exactly what he said when we did all of this, money printing
5 years ago.
Well, that was Janet, wasn't Janet's the one that used the word transitory, right?
They both did.
They all did.
That was on their WhatsApp. Say transitory. Okay.
So I'm jumping down. Wait, hold on. So I'm jumping down a bit, and just to kind of like add another point onto what Josh is saying of, copper can be an indicator, but is it a little bit kind of like noisy right now as far as like an indicator goes for a recession? So like, let's not forget the 10-year, 2-year yield curve reverted 200 days ago, right? So, it's, not an exact science, but anytime it reverts from a significant negative position, you get a recession, 3 to 9 months afterwards, and 200 days kind of approaching in that area.
You're not really saying the stock market is a closed in and it just keeps repeating itself. You're not saying that, are you? Royce never says that.
Human nature does.
That is a closed in system.
Yep.
All you need is the right indicators, and you just can predict those closed in patterns. That's what we do.
Every day.
All right. Absolutely. So what's this about private? Because I see, and your next section is private is the new public. And, I've been complaining about private equity and private and shadow banking and all this other crap that's out there, because the more private, the less regulation in my book. So, and that's why they're going to private. Exactly. They're going private to take all their sins away and put it to where it won't ever be checked in my book. But go ahead to tell us about this private, Daniel, get us started.
Yeah, so I read multiple stories this week, because I think it was probably like just announced that there are platforms like EquityZen that will allow you to invest in companies like SpaceX, OpenAI, which are obviously private companies, right? Which is typically reserved for, people who are like accredited investors, and either angel investors, venture capital, institution level. Typically people are kind of like considered big money or, more sophisticated money. But now on these platforms like EquityZen, you can invest in, SpaceX, OpenAI at, as little as $5,000. And while this isn't like a new thing per se, the equity amount and, obviously these kind of like more hot companies is a little bit newer, where before these platforms always held kind of like some weird abstract like startup that, wasn't kind of like the hot Silicon Valley one. And, when reading these articles, it made me kind of think one thing of like, are they somewhat struggling to get capital inflow? They feel the need of like, oh, well, instead of just going with our normal institutions, we were going to bring in a bunch of random retail investors into our market cap or cap table, or are people just so hungry to get alpha because they're worried about the stock market, that they're just kind of craving these different types of investments, and the platforms are meeting them where they're at, of just continually lowering the minimum in which you can invest. And
What do you
I
think,
see
Royce?
this as a market top kind of thing.
Right. What do you think, Royce? Why is private the way to go? Why are they doing it?
I will say this: a lot of people they do not think like banks, right? So typically, how a bank thinks, like for example, when the interest rate started to rise, people could not afford to refinance their houses because they can afford literally less house the higher the interest rate goes, right? Makes sense. But in the private sector, let's say, for example, instead of taking the 7 or 8% interest rate now, they can go, you know what? Is your loan assumable? Is your loan assumable? Basically, finding ways to say, you know what? You got that at 2.75, or you got that at 3%, you got that 3.25. Can I just assume your note? I will pay you out the equity. We'll get an appraisal. I'll give you exactly that equity out of there, but I want to assume your note and not have to deal with that 7% interest rate, which means I can almost afford twice as much house by literally going into the private sector or going to a private lender to get it done.
Yep. You and I were talking about that not too long ago.
Yeah. And for those who don't know about it, it's the literally the first question when I'm buying a house is the current note assumable? It's not, hey, how much you want for your house? Is it assumable? Because I know for a fact that the interest rate is going to be lower than what the current interest rate is.
Yep. And are you hinting that it's a liquidity thing, Daniel? Is that what you said? Or because I think Royce a couple of weeks ago said that the M2 supply seemed to be okay as far as liquidity goes, but it has to be.
I don't necessarily mean like liquidity in that sense. I mean of like the amount of capital that the typical investor in SpaceX is willing to put in at its current valuation. Gotcha. They're maybe kind of not there anymore, and a retail investor who has little pull is probably just stoked to own a little bit of SpaceX before it IPOs, and not really too concerned about like the current valuation, right? Where I have no idea if they're an investor, but if Andreessen Horowitz, has a fund that they have to return capital to and they need out, like they're like, all right, well, like I don't really care who buys it because I need out of the position. And, kind of creates a new pool where, maybe, X pension fund that used to come in and buy the secondary is like, markets are kind of uncertain right now. We had, really big valuations get cut before in our portfolio, so we're not really interested in picking it up again.
Yep. Speaking of banks, Banker, you got anything to add on?
Yeah, I mean, to be honest, I had not heard about much of this until recently, and so I kind of dove into it earlier. And I mean, it's actually a really interesting concept. It's a bit of a niche market, but I kind of think I likened it to sort of like what Robinhood did with the fractional shares, where they would let you could get a piece of the pie without having a lot of capital. I mean, previously you couldn't get it. You could only get shares of a company if you were like an employee, or you got some sort of incentive or something, or if you happen to be get in on like on a couple of rounds of funding or something like that, or capital investments. But the one thing that was, I guess, a couple of things that were interesting to me. I mean, yeah, you can't get those, but I always look at, if you go back at historically and look at like IPO prices,
right,
versus where they are, 5-10 years down the line, I see a lot more IPO pricing being astronomically higher. And then once it goes public, that price tends to fall off. Yep. Now, there are obvious exceptions to that, that like look at Amazon, that it, IPO opened at like $20 or something like that. And now it's absurd. I mean, you're doing thousands of percentage of return, and that's a much better ROI. But at the same time, there's so many risks to this, because let's say you invest in somebody like something like SpaceX, and SpaceX never goes public. Well, how do you? I mean, you can't. There's no market there. You're not. Who are you going to sell your shares to? If they don't go public, then you're SOL. Not to mention, you can't, like I said, you can't really, if you want to get out and you decide that you don't want to wait until they go public, again, if they don't go public for 10 years, you're stuck at whatever the valuation is. And the other thing is, valuation of a private company is a lot trickier before. Once they get to IPO status, then all of the various market concerns gets factored in, and you have a better understanding of what it is. Where they do it, pre-IPO is kind of like a similar IP. Like, let's say SpaceX, for example, they might liken it to like a Blue Origin or a Virgin or Galactic or somebody that has already gone public. And then they're like, okay, well, it's just, apples to apples there. And it was just, yeah, I mean, yes, there are obvious upsides to it. If you get in on like SpaceX specifically, and you buy in at 70 and SpaceX goes to, $5,000 a share, sure, that's great. But there's just a lot of, to me, there was a lot of risk that outsized the reward.
Yep. That's a good wrap up there. Let's move on and just do the next section. Let's just do it. We got Nike. We're going to talk about now. I can't. Thank you. Yeah, I really squeezed that one in, but I have a very close.
Stones, I need to.
My son works for Nike, and
a friend.
Yes. My son works for Nike, so I won't put too much into this, except for I hope they do well, because I want my son to do well. This is. It's funny because they actually were better on their ER, but then they were not. So they were both at the same time. So which happens because then they can play both ways. Kramer can play both ways because he can take the whichever side he wants to and still be wrong or right, which is the game every day, right? China, I think you mentioned China could be the issue, which obviously that is part of it, because we were talking about other luxury goods not too long ago, and how China likes to buy the luxury. And I don't know, Nike's luxury, maybe, I don't know. But either way, they do have a big business there in China. And you said that they had a 17% drop in their sales, according to the ER. And so I guess the bigger question here is, does China indicate what the rest of the world's going to be for certain for certain companies like Nike? What do you think, Dan? Anything to add there before I give it to somebody else?
I thought it was an interesting thing because, there's definitely a few factors going on with Nike, and obviously, it's, somewhat in fashion to find anything that you can blame outside of just like a slowing economy or consumer
right.
To blame. But, a 17% drop in sales in China is pretty large, right? And if the Chinese economy is really coming back, and assuming, in America, Nike kind of has a brand issue, right? And obviously I have no idea how it's perceived in China, but assuming it's not a brand issue and it's just a consumer spending issue, if you look at Nike, it's kind of forming this like huge long bottom. It's like kind of, not right now waiting to pop, but like at some point it kind of begs the question, is it going to like catch a bid with the consumer as far as like revenue goes? And like, will you see the Nike recovery? Everyone's, kind of like getting a little excited with the new CEO that they brought in. And so, it's just something I've like kept an eye on of like, okay, like, it's dropping, kind of rightfully so. And like, when does the turnaround come? And this earnings report made me think of like, okay, well, if China's supposed to turn around soon, does Nike turn around soon?
Yep. I think it has to happen, but I'm sure there are charts to look at when it comes to Nike. To see what's happening there. I know.
Don't do it yet.
Yeah, right.
Just don't do it yet. Anything you want to throw in there, Banker, before we move on?
Yeah, I don't know. I don't know if I necessarily see the China recovery making a huge dent in Nike's bottom line. I mean, if you think about what China is doing specifically, like it's not. I mean, half of the stuff that Nike produces is made in China and Vietnam anyway, so it's significantly cheaper over there. It's not a value concern. It's not really like a cost issue. It's just kind of like they're shifting more to, that younger generation that would buy all of that stuff. It's kind of like a branding issue. They don't necessarily see it the same way that we do. Nike's fallen off really favor a lot of places here too, but or fallen out of favor. But yeah, they're just really, the younger generation's kind of shifting towards more local brands and smaller companies and like buying local and sustaining their own economy rather than, supporting some American company.
Yeah, I blame LeBron.
Yeah, going from what's that?
I blame LeBron.
I'm a Laker fan. I don't even like LeBron. He should have stayed in Cleveland. I don't want him to retire as a Laker.
LeBroning all the way. Oh,
and
my
Bronny.
foot.
Yeah.
My foot.
Ouch.
Okay, I'll stop.
If you see me doing that, I'm not faking it. It's probably really happening. So we'll move on to the because I'm the old person here. So we're going to touch back again here in this next section with the R word, which I'm sure if it's possibly technically a recession, they'll change the definition again. So go kid. Give us the facts.
I have a contrarian take on that. If they change the definition of a recession, it's going to be so Trump can go, look, we've been in one since Biden was in office.
Mm-hmm.
Yep.
I believe we have been. But anyway, go ahead, Daniel, with your facts and figures on industries that are like are showing the signs, the cracks, or at least we're finally admitting to it. Go ahead.
Yeah, so I'll be interested in Royce's take on this one because FedEx cut their full year guidance because of economic uncertainty. So pretty much they're like, yeah, things aren't looking good, so we're just not going to give you any more predictions, which kind of aligns with, Walmart and Dick's. They've also kind of warned that consumer spending is slowing there. And this is, typically seen as kind of like a bad recession stock. So it got downgraded by a bunch of analysts. And, one of Royce's great plays in the last, couple months, year was the GE split. And I didn't know this, but apparently FedEx is looking at spinning out their freight business, which is a $30 billion business.
Yep. That's their biggest, that's their cash cow.
Yep. So, I'll maybe leave it to Royce to inform us of how this is a canary in the coal mine for his old employer.
You claim them, I claim I get. Okay, I'll claim them. All right. So, FedEx is talking about splitting off freight, like there's FedEx ground services, freight, air, all those guys, right? Typically, when a company divests another company that's actually profitable, they either leave all their liability with the one that's not doing well, and so that basically they have clean books, and basically it's almost like they get a running start, right? And also, I saw that FedEx also did not hire nearly as many seasonal workers this past fall, right? And by them not hiring as many seasonal workers, basically what they did, they stood up a whole bunch of automation and robots and other things to sort and pull and do all of the things that people were doing at the Memphis airport to get those packages out. Is this a shift that's going to be other people will follow? More than likely. FedEx has traditionally been the first indicator that actually shows a recession is coming because people are shipping less. There's less goods going through. And if their sales are down, there's a good chance that a recession is right around the corner.
So same with Amazon then?
Nope, not because even Amazon ships through FedEx.
Yeah, there you go. That's right.
So if FedEx is slowing down, that is like literally what I look to typically for recession. AutoZone going up in value, FedEx going down in value, because typically in a recession, people are not buying new cars; they're repairing their old cars, and they're just trying to get to work.
Yep.
So typically, you see a whole lot, an influx of more business for AutoZone as the market crashes. So you can go back and look at 2008, look at the 2000 crash. Both of them were stellar years for AutoZone, like literally record numbers. So if you see, AutoZone break 4,000, yeah, that's not good for the rest of the world. And if you see FedEx back in the $100 range, yeah, it's not good for the world either.
So we're just doing all Memphis stocks here. Let's go.
Dang it. And Elon moved to Memphis too. Dag nabbit.
That's right. That's right. We've talked enough about him.
Oh, yeah, right?
Everybody does. Everybody else does, for sure. I just made a note. You said something about when you split companies, you put all the bad debt or whatever with one end and then let them take it all. And that just reminds me of what currently or what is happening now, which is the whole UBS Credit Suisse thing that's going on. And they're, what they did with all the bad Credit Suisse and kind of push it all off onto them. And I don't know. We'll see what happens there too.
Well, it becomes a write-off. You're shedding liability, so that means your books are clean if you're the company that's leaving.
Yep.
And basically, you are, if you're net revenue positive, that just makes you look even better, right?
Yep.
Yeah. So just from that standpoint, it's almost a smart move. Like I've seen International Paper do it. I've seen AutoZone do it. I've even seen a whole bunch of other people do it. And typically when they do it, they come out smelling like roses. So, hey, FedEx saying, hey, we're going to get rid of freight. Freight is a beautiful, beautiful, beautiful $30 billion business per year, right? So why would you spin it off? Why would you get rid of it? It's just a vehicle to help propel you to the next level.
Yep. All right, Mr. Daniel, we're going to talk about so what did actually happen when Powell jawboned. That's next. And the Fed come out and say we're not changing rates now. We're just going to sit back and look for more data, which I think I've heard for 2 years straight now. But go ahead and tell me what was said this last time and what's maybe about to happen.
Yeah, so as we said before, they left rates unchanged. They said they might cut twice more this year. The kind of maybe interesting part is that based on the data that they would you would see right now, normally they would cut, but inflation is still well above 2%. So they're not doing anything, and potentially inflation will get higher depending on how the tariff situation goes. Because, it kind of depends on what it actually implemented at what level. Now, the somewhat concerning part is they lowered the economic growth outlook of the U.S. by 0.4%, which is not great, right? Because that was from their projection already in December. So it hasn't been that long since they made their estimate and then revised it. But the very concerning part is that Powell downplayed the concerns of if the tariffs would be inflationary, and he said they would merely be transitory, which I'm like, we talked about this earlier, do markets repeat themselves? And I said, not quite, but humans do. And here we are with literally the exact repeated words where he was incredibly wrong, so
mistaken. They're never wrong.
Oh, yeah,
I think,
yeah.
You could chalk it up to
they were corrected, but they were never wrong.
I'll put it this way, when you're, doing economic policy stuff and people like Stanley Druckenmiller, one of the greatest traders of all time, saying, hey, this is not going to be transitory. This is a bad idea. Off of some guy who knows how markets work, he'll make money regardless, right? And if he comes out and says that, I'm like, yeah, you should probably listen to the guy. He's never had a down year ever. Like he probably knows pretty damn well what's about to happen.
Yep.
It depends on how much they paid him to say that, though.
Exactly. In Bitcoin.
Well, George Soros would have paid him. But.
Could you make the statement for us? I'm like, here's a C note. There you go.
Get him, Doge. I mean, anyway. Hey, Josh, anything to add to that before we start wrapping up?
Not especially. I mean, I just think, I've said it before. I still don't think it's transitory. Like I mean, everything kind of screams, yeah, we are heading towards a recession at some point. I think they'll kick it down the road. They'll put it off. It'll probably be, later this year, September, October.
Talking about right as they say the word recession, we're going to get a nice 5,000 check from the Doge administration to help stimulate the economy, but not call it a stimulus check.
No,
it was a kickback.
Because I got sent like $20. I was like, this is useless.
I can already see the spin on this because they're gonna refer to it as the Biden bubble, and it's now the Biden bubble, and the Trump economy just came in and just happened to burst that bubble for the good of America. And look at how much cheaper everything is now. You still can't afford it, but everything's a lot cheaper.
Y'all heard me say we're gonna have a big party if this happens in June.
Huge bubble. It's a huge bubble. It needs to be popped.
The
June bubble bubble.
Biden bubble popping.
Mm-hmm.
And then have a picture of Hillary looking at the balloons.
All right, let's go ahead and move on. We've got something else happened, which is Royce and I are majoring in futility now because we are not on the board yet. But the guys in the two corners,
I'm not even concerned.
He's enjoying it though,
right.
because yes, he's enjoying it. I'm not because I still
You're
have
competitive.
Yes. I'm just going to complain about not getting to go first or second. Well, I guess I did when he won. I did several weeks. Still didn't do
it.
I got to win so I can go first the next week.
Team player.
All right. So here's your scoreboard. As you will see, by the way, it was on Newport. Is that right? Newmont. And it pretty much was. It was the top end. We really just kept looking from the outside in all week. That being the other ape and I, Josh and I, we got to watch those two battle it out. And, Daniel came out the winner. So 3. And Daniel can do another 3 in a row. If he does do 3 in a row, three-peat, then he will overtake the lead. And so will the team. So right now we have, whoops. Come on, Darin, get back to where you're supposed to be. There you go. It's 3-3 on the Quanticus versus the Apes. And it is 3-3 with Daniel and Josh. And let's just say the other people aren't participating right now. We'll go.
We are participating.
That's right. So as always, Mr. Daniel, what millennial stock off of Reddit did you pick this week?
I mean, first of all, your son is the one that had the GME call, so really we need to get him on here.
Don't bring him in. Don't bring him in. I'm trying to get him out of that mindset. All right, go ahead.
We'll do Royce's favorite energy drink, Celsius.
Okay, Celsius is going to be the next week. Now we do have you wanted to do a crayons, right? So I mean, since we do 2 of them kind of every week now, we might as well do them both together. So now we know it's Celsius, and then you had let's go ahead and do after the bell. We'll do the graphic here, crayons and charts with Royce Wells from Arbitrage Trade.
So am I doing
And what is it this week? Oh, you're going to do Celsius first. All right.
No, you can't do Celsius as we're about to bet on it.
Right? Like, what are you doing, man? What are you doing? All right.
Bro.
All right.
He's got Celsius up.
I got Celsius up, and I'm looking around. Oh, I'm loving it.
You can't
loving it.
Do it.
Loving it. Okay, I know which way I want to go. So now I change the charts.
What chart are you going to do this week? What chart are you going to do this week?
So we're on. Let's go to the daily time frame because that's typically where we put our dashboard at.
All right.
All right. All right.
Okay.
So this guy, this is absurd. I can't do this. I'm sorry. Look at the tails on this silly thing. 37 with a tail all the way down at 17. That's like a $17 range on a $35 stock.
Well, half the stock, basically.
This is absurd. But hey, we like it. Let's meet somewhere in the middle. Let's make it reasonable. Let's go 30 to 38. So everybody gets $2.
All right. So Daniel, you get to go first.
Okay. I'll do. Let's do 32 to 34.
Okay.
And then you pick who goes next, sir.
Oh, Royce.
Say, do we even need to go through that anymore?
We already know how this is going to go.
Ready?
Until we have that randomizer.
I want to pick Darin, but Royce employs me, so.
You know what? I'm going to pass to Darin.
No.
Wow, a gentleman and a quant.
But I don't have.
There
I
you
don't
go.
have an excuse, though. I don't have an excuse anymore. Don't do that.
Go for it now, man.
Don't mess it up, Darin. Don't mess it up, Darin.
Ah, jeez. I keep trying to use macro, and it just never happens. I have to actually do what chart are we on?
I'll tell you
It's
what,
the daily chart.
more and more Celsius are being sold, but that doesn't seem to matter to the stock.
He's got it on the daily chart instead of
I can
shorter
bring it
time
down
frame.
lower.
Okay.
Want it lower? We can bring it lower. Is that better?
Yeah.
Okay.
Patronizing him.
I said nothing. Nothing.
All right. What? I'm gonna go. The bottom. I'm gonna do the 32 and down. So
32 to 30. Okay.
32 to 0.
No, 32 to 30. 30. I guess it does go to 0 technically.
Yes,
okay.
technically.
And you got 32 to 34, Daniel?
Yeah.
Yep.
Okay. So, I can't let Josh have the range it's already in. So I'm going to have to take, 34 to 36.
Yeah.
That's only fair.
So we're going to be the head and the tail.
I'm not even upset about it.
Josh, you better go buy some Celsius this week.
I mean, yeah, I probably will, just in case.
Make a difference.
Yes.
Make a change. Make a difference.
Potential karma in there.
There you go.
I just needed to hang out here for about 2 weeks. That's all I need.
That's the thing. Is just the time frame. All right.
2 weeks.
Yep.
So
we're securely past next Wednesday.
Yeah.
If it's 1 week, then it's been upset. We don't like that.
All right, Royce, did you have another one you wanted to throw up? Are these going to be the one and the same?
Sure. Let's go take a look at.
Are we going to look at SPY or no? Oh, okay.
Nope. We're going to look at ALAB.
Astra.
Alabama.
Electronic what?
Astra Labs. Astra Labs on a 4-hour time frame. Arbitrage band just today, about 4 hours ago, put out a nice sell signal. Black line finally underneath the pink. So I'm expecting this guy to fall quite nicely. Looking at this guy, just going through the different time frames, right? So he's fairly new. He's only been out not even a full year yet. So this April should make the beginning of basically 1 full year since their IPO, which means there's not a lot of data on this guy. But he tried valiantly, but he failed. So he got back up to the RSI line on a daily time frame, and a lot of people were expecting, hey, maybe this will be the ride that gets us going, where it'll just go through the roof and find its way up to 100. Let's say just 100. That's the mean line of the arbitrage band. But it looks like it's rejecting that, bouncing off of that, and potentially, no one wants to hear this, but making it down to around the $49-ish range over the next 1 to 3 months. So keep an eye on it, and if it's in your portfolio, think about that. That's all I got.
All right. Hey, before you do that, go back to the beginning, the IPO point. It looks like it's about at that point where it started almost.
Yep.
Okay,
it's almost where it started. Yep.
Yeah, isn't that something? It doubled, then it came back down to the point where it started. Those investment firms, aren't they something? All right, so they got.
Well, it could be investment firms. It could just be hype, and then basically it's 1 year. People are now saying, "Hey, you forecasted something. You either hit it on the first half of the year when you were out there, but what have you done for me lately?" And doesn't look like they've done anything for their investors lately since, January of this year, when it was at 130. How do you lose half of your value in less than 6 months?
Because it's time for them to get their money back from their investment after the retail
That,
pumped
or
it
to
up.
start buying back their own stock to make it go up.
Yeah,
So
true.
You have options.
True. All right, that is Royce Wells, Crayons and Charts, and of course sponsored by Arbitrage Trade. So let's get back to where everybody's up here. There we are. Anything else you guys want to add? Is there anything crazy going to happen this week? I guess we got to see what Trump said today with the tariffs.
I wonder if Trump can Trump. We got the Declaration of Independence here in my office. Oh wait, never mind.
No, that's Ken Griffin bought that, didn't he? Mr. Citadel bought. Yeah, he sure did. That's a whole nother thing I could do for 2 hours. Is Ken Griffin? All right.
Darin, ask your son what stock we should buy calls on for next week.
Oh, stop it! Look at him. He's attacking Royce. Can you do something about that? He's attacking my son. He's making it personal.
Help Daniel.
Whoa, attacking. I'm trying to add some positions to my portfolio. Okay, your son's so profitable.
No, he got in and out on those calls with GME. So he made money and he got out. So that's the good thing. Maybe he's learning. Don't hang around forever with those.
Tell me what the calls are.
But as Roy says, it's better to sell them than to buy them.
Absolutely. Always be the seller. You make money when you sell. You make profit when you take profit by selling your stock or selling your options or selling. You never make money as a buyer. Stop spreading lies.
Lies. All right, guys. Appreciate you all coming in. We will see you again next week. Hopefully everyone will be all good. I mean, you've done well, Daniel. This is 2 weeks in a row. Good job.
I think this is the first time it's been in first place.
Yeah. I'm talking about being able to make it on the call, but yes.
To be fair, Josh.
Josh is like, wait, come on.
Hey, all right, you guys have
been in first place and tied for first place several times, Josh. It's inevitable. You're gonna win a season. I know it's gonna happen.
He looked into that. He looked into that first win and then buried me in the depth chart.
Very much. You're buried again. It sucks.
All right, Jim.
I have no excuse next week. All right. You guys have a good weekend. We'll see you here next Wednesday after the bell.
Sounds great.